It is the 7th of November 2022. My name is David Hickson, and in today's market update we're going to be taking a look at the price of gold. But before we do that, and as soon as you've had an opportunity to read these disclaimers, I am going to introduce you to a brand new analysis service that I am very excited to have launched in conjunction with Christopher Grafton, a fellow Hurst Cycles analyst and author, of course, of Mastering Hurst Cycles. This is the new site that we have launched. It is called Hurst Cycles Notes. At its core, it is a newsletter service. We are publishing a weekly newsletter. At the moment, we have launched our first newsletter. It is called Macro Outlook. Let me take a look at that. The Macro Outlook weekly newsletter covers 9 major markets around the world with occasional guest markets which are included. You can see here is the Macro Outlook for the 7th of November. The weekly newsletter is a subscription service, but there is a great deal of information available for free, including our long-term analysis on many markets, which we are constantly adding to and updating, as well as a good deal of general information about Hurst Cycles and how Hurst Cycles work to affect the markets. I will put a link in the description below this video so you can take a look at our new analysis resource. I do hope that you find it valuable. So let's take a look at gold, and I'm going to start the discussion with gold, of course, by discussing the fact that I believe that gold is influenced by cycles that are synchronized at their peaks. And so, therefore, I think that the peak analysis is probably more important than the trough analysis. However, we do certainly watch a trough analysis because there is a great deal of insight to be gained from tracking the trough analysis. The important thing to note at the outset when considering gold is the fact that a major cycle peak has probably formed in this market. You can see there that is phased as a 9-year cycle peak. And if we zoom in, we can take a look at more detail. Here is that 9-year cycle peak, which occurred in August, I think it was, in 2020. As I've mentioned in many of these market update videos, I sometimes take the exact magnitude of the very big cycle peaks with a pinch of salt. I'm not absolutely sure that is a 9-year cycle peak, but it is certainly of greater magnitude than 18 months. The reason I say that is because we had another peak that formed over here, and that was 577 days later, not much longer than the average length of an 18-month cycle that Hurst discovered 50 years ago, which was 546 days. And if you go back and take a look at the market update videos I was recording at the time for gold, you will see that we were anticipating this 18-month cycle peak. The fact that this 18-month cycle peak occurred at very close to the level of the previous peak in August of 2020 certainly means that one of these peaks is of much higher magnitude than 18 months. I shouldn't say much higher magnitude, but it is of higher magnitude. The chances are that that peak in August of 2020 was therefore of at least 54-month magnitude. But it is also possible that it was this peak over here that formed, I think this was in March of this year, that should be awarded with the higher magnitude. That is the reason why, of course, gold has been dropping down. It is not unusual, I should point out, following a very big magnitude peak or trough, to see the first lower magnitude cycle that forms in the market not really move very quickly. And this is a perfect example. Here we have the W shape that forms in a market that is influenced by cycles that are synchronized at their peaks. And you can see that is a very balanced W shape. It's not a very bearish cycle, and it's certainly not bullish. It's entirely balanced. That is often something that one sees, and then the bearishness suddenly picks up after the first cycle forms its peak, or if we're looking at troughs, it would be after the first cycle forms its trough, and then the bearishness increases. And so that seems to be the situation that has been developing in gold. The reason that I mention it here is because it is fairly important to bear in mind as we're taking a look at the formation of the recent trough that the underlying trend for gold is pretty much bearish, with the longer cycles pushing downwards. Now let's turn our attention for a moment to the trough analysis. The first thing I'd like to point out about the trough analysis in gold is that it is not nearly as clear as the peak analysis. I'm not going to go into a very detailed explanation about the difference between a trough analysis and a peak analysis. Suffice to say for now that Hurst discovered the principle of synchronicity, which told us that the troughs of the cycles that influence stocks in the US market that Hurst was studying in the 1970s were synchronized. In other words, the troughs occurred at the same time. There is some evidence that some markets, including gold, actually experience synchronized peaks as opposed to synchronized troughs. The result is that the trough analysis can sometimes look a little unclear. For instance, here we have an 18-month cycle trough in December of last year, and that is below this little price action over here. You can see also that here we have a 54-month cycle trough in 2020, and that is below this rather questionable low price over here. I won't go into all the details, but the point is that the troughs in gold might not be synchronized, which is why sometimes the analysis, the trough analysis, doesn't look very clear. However, there is often very useful information in the trough analysis, and that's really what we're going to be discussing today, because recently the trough analysis has become a little clearer. For instance, in May, we experienced a fairly clear 20-week cycle trough, and over here in July, a clear 80-day cycle trough. And there was also a clear trough over here towards the end of September. Now that has been phased as a 40-week cycle trough, but given our uncertainty around the trough analysis, what I choose to do, as I've been doing in many recent market update videos, is rather select my level of confidence in this analysis. I'm not absolutely confident that that is a trough of 40-week magnitude, but I am confident in this recent rhythm that we have seen in gold. And so let's display the chart slightly differently, expressing our level of confidence. As you can see, I have reduced the display of the diamonds down to the 80-day cycle. I am really very confident in the 80-day cycle in this trough analysis. The peak analysis, I have a higher level of confidence, but for now we're going to focus on the trough analysis. Here is what I would like to point out about the recent 80-day cycles. The cycle that elapsed from May until July was a bearish-shaped 80-day cycle. That is because it had an early peak, that is left peak translation. Again, refer to the Hurst Cycles Notes site for discussion about peak translation. And of course, the cycle brought price to a lower level. Those two things indicate that this is a bearish cycle shape. The next 80-day cycle also had a bearish cycle shape with an early peak and, of course, bringing price to a lower level. Now, what is going to happen to the next 80-day cycle? Here is when we are expecting the next 80-day cycle trough. It is expected in early December. What we have seen so far of this 80-day cycle has been one 40-day cycle, and we're going to speak about this 40-day cycle trough in a moment. But as you can see, that is a fairly bearish-shaped 40-day cycle. Why? It hasn't brought price much lower. In fact, I don't think it did take out the low level of the last week of September. So it hasn't brought price lower in this 40-day cycle, but it did experience a very early peak. That is a bearish sign. In other words, that is a bearish-shaped cycle. And so if this trough at the end of September was a high magnitude cycle trough, such as a 40-week cycle trough, we would have expected some signs of bullishness. And those signs of bullishness have not been evident yet. And so therefore we have no evidence that that is a higher magnitude cycle trough. Using only the evidence on this chart, our focus, therefore, is on the fact that we are still in a bearish situation. Price has probably formed this 40-day cycle trough. We'll take a look at the moment. It is now bouncing out of that 40-day cycle trough, but our next 80-day cycle trough is expected in early December, and at the moment this is still a bearish 80-day cycle. Therefore, our expectation should be for a greater move down into this 80-day cycle trough expected in early December. Let's zoom in and take a look at a little more detail. First of all, let's consider this 40-day cycle trough. I've mentioned several times that it is likely that that trough is formed. Here is the nest of lows that you can see was centered, if we connect the circles like that over there, was centered pretty much towards the middle or end of last week. And so it is very likely that this low price on Thursday is in fact the 40-day cycle trough. If we measure the number of bars that have elapsed from the 80-day cycle trough at the end of September to this trough over here on Thursday, you can see that is 36 days. And the average length of a 40-day cycle discovered by Hurst 50 years ago is in fact just over 34 days. And so that is a very appropriate point for a 40-day cycle trough to occur. As a matter of interest, if we display the 20-day cycle FLD, if you go back and take a look at the market update video that I recorded a few weeks ago for gold, you will see that I discussed the fact that we were expecting an 80-day cycle trough or greater magnitude trough to occur over there, and the critical point would have been whether price found support at the level of the 20-day FLD. As you can see, price did not find support at the level of the 20-day FLD. It perhaps caused a little bit of a hesitation in the downwards move, but price dropped down below that 20-day FLD, which was a bearish sign. Now that price has crossed up above the 20-day FLD following the formation of what is likely the 40-day cycle trough, we have generated a target which is not very much higher than the distance to which price has already traveled. I think it's at a level of about 1685. And so our expectation for gold is the price is bouncing out of a 40-day cycle trough, but we are still in a bearish mode, and so we're looking at price traveling up a little bit. I have left the peak analysis on this chart so that we can consider what is going to happen in terms of peaks. Price is going to reach a 40-day cycle peak, which would then, of course, be an early peak in the current 40-day cycle when considering troughs. And then price is expected to move down into an 80-day cycle trough, as mentioned, expected in early December. I have discussed the zigzag tool in Sentient Trader in previous market update videos. The zigzag tool works on the basis that price tends to describe a zigzag price movement between troughs and peaks of the same magnitude. And you can see this zigzag tool, interestingly, is of course expecting a 40-day cycle peak to occur fairly soon, and then of course target price moving downwards into this 80-day cycle trough. The interesting thing about the zigzag tool is not looking at it in very small scale detail, but zooming out a little bit and combining the zigzags of multiple cycles. And so here I have added the 80-day cycle zigzag, which doesn't provide very much extra information because those two cycles are working together. If we add the 20-week cycle zigzag, you can see that the 20-week cycle is also projecting a move down into early December, followed by a fairly good bounce up into this cycle peak expected over here, which is in about middle December. If we display all of our diamonds and circles and whiskers again, you can see why the peak in the middle of December is a fairly important one, because it has a magnitude, according to this analysis, of 40 weeks. And so our general expectation for gold is that it bounces out of a 40-day cycle trough, then will form an early peak and move down into an 80-day cycle trough. But we must bear in mind that it needs to form an important 40-week cycle peak over here in the middle of December. An interesting thing happens when you combine two analyses in this way, because you must remember that the trough analysis and the peak analysis are two entirely separate analyses. The interesting thing that sometimes happens is that you will have a nest of lows for a particular trough, in this case an 80-day cycle trough, occurring at about the same time that you have a nest of highs for an important peak, occurring in the market, in this case a 40-week cycle peak. And you can see that they are occurring at almost the same time. What we are going to experience is something like a battle of the cycles. And so we are looking at three stages to this move. a move up as it bounces out of the 40-day cycle trough, a move down as it falls to the 80-day cycle trough, and then a move up as it reaches the 40-week cycle peak. Is it possible that this 40-week cycle peak will actually occur before the 80-day cycle trough? It is possible, but it is not our expectation. What we are going to be doing is looking for this 40-day cycle peak to form. Once that peak has formed and prices started to move down into the 80-day cycle trough, we can determine whether the 40-week cycle peak is exerting such a strong influence that this move down here, this second stage of the three-stage move, is going to be a fairly muted affair, or whether the trough analysis is going to exert some pressure to bring price further down into the 80-day cycle trough before it bounces up into the 40-week cycle peak. We have two important levels to watch as the price action unfolds. The first is this 20-week cycle FLD, this green line on the chart over here. If price succeeds in crossing this 20-week cycle FLD, that will confirm that the 20-week cycle trough has formed in the market, which is of course a possibility, indicating that the move down into the next 80-day cycle trough will not be a very dramatic affair. The other important level to watch is this 80-day VTL, which will provide us with the same information. If price crosses above the 80-day VTL, that will confirm that a 20-week cycle trough has formed in the market with the same implication. The final observation I would like to make about the price of gold is this 54-month FLD. Here displayed on a monthly chart, you can see the price has recently come down and found some support at the level of the 54-month FLD. It will be interesting to watch over the next few months to see whether the 54-month cycle FLD is going to provide support to price. Changing back to a daily resolution chart, you can see how accurately that 54-month FLD has indeed provided support. With some support provided over here, price dropped below the FLD ever so slightly for just a few days, several weeks ago, and here again price found support. Now a 54-month cycle FLD is unlikely to provide such accurate support, so it shouldn't be taken too seriously, but I thought it was something interesting to observe to complete this video. I do hope that you found this market update useful and interesting. I look forward to seeing you on our Hurst Cycles Notes site, and of course join us on our Hurst Cycles Discord server, where you are very welcome to join the conversation and ask questions, or ask your questions in a comment below this video. I look forward to hearing from you.